Hello, everyone, and welcome to the newest episode of the DM Member Spotlight series. This series is all about showcasing our members' innovations that are solving real challenges in the world of digital money, payments, and infrastructure. If you enjoy this format, please hit like, share it with your network, and don't forget to subscribe to our channel to stay up to date with more exclusive content. I'd like to thank all our standard members for their continued support and say that during the episode, we will open the floor for a few audience questions. So feel free to drop your questions in the YouTube chat throughout the session. Amazing. So today we are joined by Florian Bogarts, Senior Business Development Manager at PPI, a company with extensive experience in payment systems and banking technology. Florian has been closely following the evolution of the digital euro and working on how banks can prepare their infrastructure for this new payment landscape. And over the past few years, we have many discussions about the digital euro from a policy and regulatory perspective, but today we are shifting the focus to something equally important. So what does it actually mean for banks to implement the digital euro? And at first glance, it might seem like the digital euro is simply another payment method, but as we will hear today, it introduces a fundamentally different operating model. And banks will need to manage wallets, interact with the Eurosystem, handle online, offline transactions, and coordinate multiple processes in real time. And of course, that all while maintaining security, compliance, and seamless user experience. So the big question, so how can banks prepare for this transition without replacing their entire payment infrastructure? And during today's conversation, we will explore the architectural and operational challenges that banks face, why orchestration becomes such an important capability, how institutions can modernize step by step, and how these investments can also help prepare for future forms of digital money. So Florian, thank you so much for joining us today. It's great to have you here.
Hi, everybody. Thanks, Tamara, for the nice introduction. I'm happy to be here. Thank you.
Amazing. So perhaps to start, let's setting the scene, right? So where does the digital euro stand today? What has changed over the past year, and why should banks already be preparing?
Yeah, that's a very good question. I mean, the main thing that has changed is that the digital euro is now on track to becoming something real, something we can use to pay our stuff with. And since the legislation process has been started, it's, at least in my opinion, we reached a point of no return. So banks need to be present themselves to get ready for the digital euro. And yeah, the timeline is pretty tight. As we all know, there's a pilot phase coming up from next summer until September 2028. And from there on out, there's only like 15 months left until let's call it release 1.0 will take place, and all banks have to be ready. And this is a pretty tight schedule, because if you want to participate in the digital euro pilot, you have to start now. And if you don't want to participate in the digital euro pilot, you actually have to start now too, because what we are going to see is how the digital euro will function in those 4 defined use cases for the pilot phase. And the rulebook is going to change after the pilot phase, of course, and all the learnings that we are going to create will flow into it. So the idea that a bank can maybe wait until the rulebook is finalized or has been finalized and only start then to answer the main question, make or buy, is probably too late, because as far as I know, a project timeline for 15 months is just not enough to implement a payment engine and it's not enough. It will be not enough to implement the digital euro. Let's call it payment engine. We will likely call it a processing scheme or processing rail. It's not a standalone feature, and it's probably less complicated to implement than a full-fledged payment engine. But nonetheless, 50 months would not be enough. Start now. This is what I'd really like you to do.
And do you think banks are taking the preparation serious enough? What have you seen from your clients?
Yes, absolutely. Banks are pretty aware about the upcoming challenges they are going to face. And I mean, virtually no bank I know of has not started some sort of exploration phase yet. So they are very aware that things are going to change for them. And of course, they are monitoring the development of the rulebook very closely. And as far as I know, and from the talks we had with banks, the main question is make or buy, of course, and how the digital euro will affect the existing payment processing engines. And of course, banks that are tied to some sort of centralized IT provider will have to answer some questions too, like, for example, which part of the solutions will be delivered by the central IT provider and which parts would I have to implement anyway. And this is not a trivial question because the rulebook says that the operating banks will stay responsible for every preliminary checks, like, for example, anti-money laundering, embargo lists, and sanctions lists. And those things are very different from bank to bank. So getting a clear picture about where to connect to a potential digital euro platform and what to do and what will change from an operational and technological standpoint is pretty important. So to get a clear picture about this is probably the most pressing issue for the next for the upcoming month. And yeah, I think banks can no longer really wait.
Great. And we know that many people think that the digital euro is simply another payment method. So why isn't it just another payment rail?
Yeah, I think the main difference between the account-based world we are living in right now is that the wallet world that we are going to endeavor is will introduce another system of record, and the system of record is held by the central bank and a centralized storage, if you will. And this is outside the realm of the bank's IT systems. So that is the main difference. You can't rely on your accounting system as a single point of truth, because there's another single point of truth popping up at the central bank, and those two systems have to somehow be synchronized in order to make the digital euro functional. And this is completely new, and this is why we think it's not just a payment scheme, because if you think about your payment engine and the schemes you are running, it's basically whenever a transaction comes in, you can do with it whatever you want, and you are not reliant on external sources for the most part. But the wallet world has many outside sources, like the EZB system of record, the potential third-party providers that can use digital wallets too and provide them to their customers if they want to. And of course, the banks themselves have to adjust their banking systems and their online banking and their banking apps, because it's, from my point of view, pretty obvious that the bank wants to own the channel to their customers and want to stay the face to the customer. So integrating it somehow into their online banking is crucial. So again, we have the Eurosystem as one entity, the bank as another entity, and all the payment providers on the other hand, like, for example, when you're going to pay at a grocery store or online, these are all transactions that will come to you as a bank directly. And there's no meddling interference, like, for example, no PayPal, no Stripe, no nothing. And this is important because whenever your customer wants to pay, the money has to be transferred to the wallet instantly, and the transaction has to be committed to the Eurosystem. And managing and orchestrating all those processes is completely new compared to just processing transactions and making them ready to be cleared at the central bank, or for example, EBA clearing or stuff like that. So much more to do and much less time to do it.
Yeah, exactly. And looking for this whole of the bank, right? So how does the whole of the bank change compared to today's payment system? Because as you are mentioned, I wonder that the banks will need to do many more checks, right, to ensure that, as you mentioned, this is the final. So how do you see this change of whole, looking for the bank perspective?
I think what banks were most afraid of is indeed the idea that they have to change their whole IT system landscape to be compliant with the digital euro. But as it turns out, there's the big possibility to reuse much of the existing systems, like, for example, anti-money laundering or fraud systems. We are pretty sure that the providers of those systems will do some adjustments or upgrades so that they can handle the specifications for the digital euro. And so we tried to think about how to develop a system that can use as much of the existing infrastructure as possible, while not having to be integrated too deeply into the landscape, because there are a lot of banks that said to us in our preliminary talks that they wanted to upgrade their existing legacy core banking systems and, of course, their legacy payment systems. And the digital euro is a problem for them because it's not really something they can integrate into their upgraded payment systems, but something they have to add and put next to their existing systems. So the idea was to say, okay, let's try to encapsulate all the functionalities that are relevant for the digital euro in one component, make it as modular as possible, and try to provide as many interfaces as possible to the existing systems so that the bank can further develop their own platform without being hindered by the digital euro thing. And this is something that banks should really think about, like, for example, what about stablecoins? What about digital payment rails that we don't even know as of yet? I think the main question remains, are we really talking about a system that does payments, or are we talking about more or less of a platform that will be ready to handle different tenants, like, for example, a tenant for SEPA, a tenant for SEPA instant payments, a tenant for the digital euro, and a tenant for stablecoins. And I think the discussion is not merely academically, because if you look elsewhere where digital currencies start to emerge, like, for example, in Switzerland, there are some private banks who want to create a digital Swiss franc, and the technology they are going to use is Ethereum blockchain. And this is completely different, from anything we've seen before. It's different to the digital euro platform that we are going to build. It's different to the account-based world, and it will probably be different to other sorts of stablecoins. So the banks have to think about, how can I build a platform that is ready for all those coming digital rails?
Yeah. It's interesting that you mentioned this, the systems inside of a bank. So maybe we can also talk what changes inside of a bank. So if a bank wants to support the digital euro, so what are the biggest architectural changes it needs to make? So you already mentioned that maybe it's possible to keep some existing systems. So which existing system can stay? And maybe which new capabilities become essential for the digital euro?
Okay, I think the main question the bank has to answer is my existing IT landscape fast enough? Like, the digital euro will be really real time if you are going to pay with your wallet. And, if you implement the waterfall and the reverse waterfall mechanisms, everything has to happen in real time, more or less. So if you have a close look into your existing landscape and you see like all the different components can manage the coming workload, that's probably no problem. But of course, some banks were thinking about, okay, how can we create a system and bake as much into it as possible in order to be fast enough to process the digital euro transactions. So I think it's not a question you can answer simply. You have to have a deep look and a deep understanding of your existing landscape. But our approach was to really reuse as much as possible. So the main thing that actually has to change, probably has to change, is the question, how do we actually connect the digital euro accounts on the EZB central ledger with the existing current accounts of our customers. This is, at least from our point of view, a question of how deeply you want to integrate it into your systems. Like, for example, some IT providers had the idea to bake this into their core banking system and have the linkage between current account and digital euro account baked into the core banking system. And this is, of course, a question of, all right, do you really want to do that? Because most core banking systems are not real-time ready and they are batch-oriented, and that's a problem. So the idea was to say, all right, let's have this linkage done outside of the core banking system. And I think as a bank, you will have to do it with everything that a digital euro brings to you, like with wallet integration. How much do you want to integrate it? Do you want to use the wallet SDK that is provided by the EZB or not? I would strongly recommend doing that, by the way. So this has to change, and all the backend system that are customer facing will change, because the bank will have to provide some sort of mechanism to allow their customer to open the digital euro wallet. It's basically the same feature that needs to be integrated like we had with Vero. I'm a customer of ING, for example, and I just have a button in my online banking and in my banking app. And so I just pull up my smartphone and tap, yes, please open a wallet. So this has definitely to change to be able to provide the customer with a view of the wallet. And regarding the IT landscape within the bank, it's surprisingly less complicated than we thought initially, because there's a potential of reusing as much as possible. And again, we are pretty sure that the providers of AML systems and fraud systems and the embargo lists will have to adjust to the digital euro as well if they want to stay competitive. And the next thing is probably how are all these system organized, because when a transaction comes into the payment engine, the processing that is done within a bank is not the same at each bank. There's like different, the chain of processes are different from bank to bank. That's what I'm trying to say. So the amount of things that have to change in order to be compliant with the digital euro is different from bank to bank. What we were trying with our solution is to make at least the technical part as independent as possible from the existing platform.
Yeah, it's quite interesting because you mentioned these differences between different banks. But I was wondering, if a bank has many different branches, or in different countries, so it will be independent process. So where the process we're running. So do you have any experiences with these different branches in different countries?
Yeah, we had indeed. It's pretty interesting to see the discussions that are going on. Like, for example, in the Netherlands, the big three banks and the central bank are contemplating whether to provide a shared service for all the banks in the country, so they can just subscribe to it. And of course, they have to have their integrations correct in place to be able to use that centralized platform. That was very interesting. But of course, there are a lot of bigger banks that are deeply involved in different markets within the European zone. And like, for example, we have had talks with a bank that is settled in country A, but has many branches in country B. And the branches in country B were responsible for their own payments operations. So they will be forced to integrate some sort of digital euro payments processing thingy, whatever, that may or may be independent from what the headquarter chooses. But the interesting part is that the liquidity management for said branches in country B was still managed by the headquarters in country A. And that is an interesting architectural concept that we have to take into account, of course. Liquidity management itself is a super interesting topic, I think. It will get much more complicated with the digital euro. But apart from that, there are so many different questions, like, for example, if you have collective banking systems in place, like, for example, where you have a headquartered bank, if you will, and a couple of branches that are its own legal entities. That is also interesting because you have to take into account that when you are processing digital euro operations for an independent legal entity, you have to have separate archive systems and stuff like that. So it's not a trivial endeavor.
Mm-hmm.
Sorry.
Yeah, I agree.
Yeah.
I want to return in one point that you mentioned before, which is the level of deepness that you want that the system integrated with your own system, right? Because you mentioned that you could have all these different layers. So maybe you can talk a little bit about this. So different layers, how this related with the state machines, maybe how this could improve transparency and also important for compliance. So comparing, a system that it's really deep integrated with your own sister, or just a layer that sits on your own system.
Yeah, I think the best approach would be to have a digital euro layer that sits on top of the existing platform. And the way we are thinking about it is that at the top level, we have the digital euro service platform that is provided by the ECB and that holds all the digital euro accounts on its own. And underneath that, we place some sort of integration layer for the digital euro that manages all the communications between the DESP and the underlying banking systems. This is our approach. And our idea was to have as little integration as possible into the existing platform. So what we are going to use is different API interfaces to connect to the different systems within the banking platform. Like, for example, as I said before, AML, fraud, etc. And of course, the accounting system, because what our execution layer or processing layer does, it has to be able to organize the funding of a wallet and therefore needs to be able to do dispositions and reservations of funds on the current accounts of the customer. And this can be done via API and interfaces. So there's no deep integration needed, and which is great for most of the banks at least. And what we thought of the wallet as a technical customer channel. So whenever the customer does something, like, for example, sending funds, topping up their wallet, stuff like that, all those transactions would be routed out to our processing layer, if you will, and handled by our software. This is the idea. So what we're seeing is we change the idea of the processing from processing and clearing to orchestration and integration. This is what our system basically does. And the only missing part in this solution is the idea of, okay, how does the bank know of the actual wallet balance of any customer? And how can we be transparent about the requirements from the ECB? Like the ECB puts it into the responsibility of the banks to do all the preliminary checks. And of course, they have to somehow document that they've done these checks. So the archive system becomes more and more relevant. And as we started to conceptualize our solution, we were like, oh, the archive system has to be event-driven. We can't use certain existing archive systems that only save like final states or something. We need to have an archive system that is able to reconstruct any state of any given wallet at any given point in time in order to be compliant with the Eurosystem. And one thing that came to mind was building some sort of shadow accounting or shadow ledger to basically mirror what is happening on the DESP. And of course, that would increase the complexity of the whole system by a lot, because you have to handle your own system of record, which is the accounting system. You have to handle the system of record as the EZB and the mirror record of the shadow ledger. And this is just crazy. So we thought like, okay, if we can create some sort of event-driven archive system, this would render a shadow ledger redundant. And this is what we did. And the good thing was we already have such sort of archive system in place, because we are using it for our hosted service software as a service solution for different banks already, for the account-based world, of course, not for the wallet-based world. And the idea was then to say, okay, look, if you have an archive system in place that is regulatory conform, and we have all the certificates for it, and we can recreate wallet states at every state in time, we can use the said archive system to check, not to check, but to treat it as some sort of historical truth and to check everything else against it. And this is nice because we don't need an archive system. And of course, we can use the system to also put all the data from the SEPA machine into it. So we have a unified view about all the payment transactions that are being orchestrated by the platform as a whole, like, for example, the account-based SEPA, cross-border, etc. Payments, and the wallet transactions, and the digital euro transactions all in one place. And this is great because you get a unified view that you can then utilize to, how do I say it correctly? You can utilize to manage your liquidity at the central bank too, because the digital euro poses another, let's call it, challenge for the liquidity and the treasury departments within the banks.
Yeah, exactly. It's a lot of work. We have one question here, which is how can banks identify the fit and gaps in the process, right? So tech, legal, compliance, etc., to support the digital euro. So do you have any kind of roadmap or a checklist that banks can use to, to identify all these gaps?
I think the best thing you can do is run the rulebook through Claude. At least that is what we did, to create some sort of dashboards. Like, for example, what do we actually have to do in terms of money laundering, for example? When does it apply? Is it okay for us to do the embargo checks by the end of the day, which most of the banks do as of today, or do I have to do it on the fly? All those questions, and not all of them, are answered by the rulebook, but you get a first overview of what actually has to be done. And the second thing we did was creating some sort of sequential diagrams that show, like, okay, here's on one column we have the customer, then we have the bank, then we have the DSP, then we have the acquiring bank, and so on. And we just drew arrows to see where are the points of handing over data and what do we have to do when. And of course, when you have those sequential diagrams, you can see when it's your time to act. And this is what we try to do. And of course, we are lucky that we only have to deal with 4 use cases during the pilot phase. But of course, you have to implement it for all the possible use cases that are described in the rule books, and some of them are very tricky. But generally speaking, you have to have those sequential diagrams in place to exactly see where are my windows of action, where can I do anything at all, and how quickly are my existing systems to respond to those API calls. And this is at least the conceptualized idea that we are running on right now.
And of course that you can reach out to Florian because he already did all the work. So we have Florian LinkedIn link in the description of the episode. So please reach out to Florian if you want more details about all this check. But we have here one question about okay, so money laundering and embargo lists are to be implemented by the banks and not by the central bank. Central bank holds the digital euro accounts, right?
Yes, that's correct. I mean, the DSP will provide some sort of risk score that you can receive from them, but the central bank will require the banks to run their own embargo list and sanction list screening, and of course anti-money laundering too, and somehow use it as one ingredient beneath others. But yeah, the banks need to be in charge of anti-money laundering and fraud. Especially, and it's actually a very good question because especially the behavioristic models implemented in most of the fraud systems will have to undergo some changes too. Like, for example, it's probably perfectly normal for, let's say, a 70-year-old woman or man to handle online banking these days. But it would very much surprise me if my mother, for example, who happens to have her 70th birthday next month, is going to send out like 5,000 euro to someone via digital euro. That wouldn't make sense. So the behavioristical models have to be somehow adjusted too.
Yeah. Okay. So one question about the pilot phase. So isn't there a risk that the pilot will generate more confusion and create significant disparity of implementation between PSPs and retail banks?
Yes. Yes, absolutely. And this is why banks need to start now, because when you have some sort of idea what is happening in the market and what you, at least as of now, have to be doing, you also get an idea how much of an impact certain changes to the rule book will pose to your current conceptualization. And I think this is very important to be able to screen all that, everything that's going to happen after the pilot phase and during the pilot phase. We are pretty sure that the rule book will change a lot, especially since many of the processes regarding the acquiring side are not yet fleshed out. And there are many problems that will occur during the pilot phase. At least that's what we believe. And you have to be able to say like, okay, this is a big change, this is a small change, this will impact me this much or that much. And you can't do it if you just say, okay, I will just wait until the pilot phase is over and see, and take it from there. That would be, I don't know, harakiri.
Now about the technology. So what's going to be the technological foundation? Will this run on-chain on an existing system such as EVM, or will be there an own blockchain? Is there any decision on that yet, or likely to follow soon?
That's a very interesting question. And the answer might come as a surprise because it doesn't really matter. And the reason for that is that the accounting system, the system of record or the system of truth will lie within the central bank. And the system that the banks are going to build or have to build are state machines that can handle the different state of a transaction. Like, for example, when a customer wants to open their wallet, the banking system would send a signal or a call to our solution in this case, or your solution or your system that you're going to have in place. And the system will then check everything like, is this person on an embargo list? Can I open the wallet for him? And only if everything is okay from a regulatory standpoint, the wish for opening a wallet or a digital euro account for the customer will be committed to the DSP. On the DSP side, so the state machine will then switch its state from regulatory okay to committed. And then we have to wait for the DSP to answer. And the DSP will then create the new digital euro account, for example, for myself, and then post back, look, here's your request number 4 with the digital euro account number that we just created. Let's call it 8. And then when the message received, the state was switched to Dean created digital euro account number created. The next step would be linking it to my current account. So my digital euro account number 8 will be linked to my current account, which I don't tell you the number right now. And again, the state will switch to linked. So processing the digital euro is not really a question of technology rather than processing and finding the right technical underlying for it to do it. And there's, of course, no real requirement. It's not like the ECB says all banks have to use, let's say, some sort of blockchain to do that. We even discussed some ideas with using existing formats like PAIN and CUMT within the digital euro platform so that we have at least, let's call it, known formats we can handle, and the technical underlying doesn't really matter in that case.
Mm-hmm. We have a question here about this, the association between the accounts. So how can the European Central Bank account for the digital euro can be associated to a bank? And how can this bank be responsible for providing a service layer when a customer may have accounts with different banks, but only one account with the European Central Bank?
Just to get it clear, the idea is a user or a customer has only one digital euro account, but several accounts at different banks, and they want to link the wallets of both banks or those several banks to just one digital euro account. That's not possible.
Yeah. Mm-hmm.
The idea is for the digital euro account to be linked only to one current account. But you can have, of course, different wallets. Like, for example, you could open a wallet on bank branch A and another wallet on bank branch B. And both of those wallets would have to have different digital euro accounts within the central bank.
Mm-hmm. But it will be possible to have more than one account with the digital euro at the European Central Bank.
Yes, the current discussion is not really about how many wallets can I have, but rather how much of a holding limit can I have? Because, as you know, there's a holding limit in discussion of 3,000 euros per person, and there has to be some sort of reconciliation mechanism to check when I have multiple accounts at different branches if the combined holdings on those wallets exceed this limit or not. And of course, this service has to be provided by the central bank because it wouldn't make sense otherwise. And the discussion was pretty funny because I think 4 or 5 months ago, it was like, okay, it's actually the case that customers only are allowed to have one wallet. And then they introduced the idea of, okay, what happens if I open a wallet in country A, and it also happens that I have multiple passports, so I can just travel to country B and open another wallet. How do you want to check for that? And the solution, of course, is, okay, we are going to allow multiple wallets that are going to share the same holding limit.
Mm-hmm. Okay.
Yeah. It's fun stuff.
Yeah. Curious. Yeah. I'd like to go to the topic, which is the offline payments,
Oh, yes.
because they are often presented as one of the most exciting features of the digital euro. But of course, that it's the biggest challenges. So we also have a question here. So, are there additional challenges for the bank supporting the offline version of the digital euro?
That's a very interesting question because, as per the rulebook, I'd say not really. And most of the banks seem to believe that since the wallet SDK is developed by the central bank itself, they don't have to deal with offline messages and offline transactions. But we think this is not true because from a theoretical standpoint, all data that is stored on an item like a smartphone, for example, that can hold a wallet, of course, and get offline, especially when you are traveling with train in Germany, you will have a lot of use cases to pay offline because of the missing connections. So the idea is basically all offline transactions are defined to be final, so they can't be made, they can't be revoked. And so the bank could say, okay, whatever, the moment the money lands on the wallet goes offline, I'm done with it. And that's not true because the device could potentially be manipulated. There could be some sort of hacking or some sort of errors or zero-day exploits, especially in the age of AI. Zero-day exploits on an offline wallet are very dangerous, of course, because you can't check them in real time. You have to check them after the fact. And so what we are trying to build is some sort of offline manager who handles let's call it offline bulk of all the transactions that have been made offline after a wallet went offline. And when it goes online again, we check if those transactions are consistent within itself. And we check them against the historical archive, like is it even possible, or was it even possible to conduct such transactions, or would there have been a flag? And also the banks have to flag potential AML and fraud checks on the offline transactions and store them within the archive system in case the regulator wants to see it. Because, of course, when a manipulated offline wallet goes online again, there has to have something. You can't allow, from a central bank's perspective, to have unidentified funds flow into the system. So somehow this has to be meddled with. And this is, again, the responsibility of the banks, at least from what we understood. And this is why, in our view, the archive system becomes such an important module within the whole solution, because it's the only way you can, somehow identify manipulation.
Mm-hmm.
Does that make sense?
Yeah, it makes
Okay.
it makes sense. Yeah, it's a biggest challenge because you of course you change the responsibility. So the banks need to maintain complying even when the payment happens offline. So all this, and of course that it's different fundamentally, right? So an online transaction from an offline transaction. So it's quite a different and also a big challenge. But you mentioned earlier the liquidity, the liquidity challenge, right? Because we know that it's different in this digital euro environment. Maybe you can mention a little bit about this liquidity management for the digital euro environment.
Yeah, of course. So if you think about how it's done today with the account-based payment systems, it's always like a customer transfers funds from their current account to someone else's. And what's being done then is that bank A, my bank, will conduct the transaction. Let's say I want to transmit 100 euros to you, Tamara. And then my bank will do the transaction and do the clearing, of course, and then the funds land on your current account, more or less. And the good thing about that, this real-time situation is very well covered by the banks, and only a transaction triggers that sort of clearing operations. And the clearing operations itself usually happen at some sort of central bank or IBA clearing. And the participating banks have some sort of main cash account that is stored within, for example, the EZB. And the main cash account has several dedicated cash accounts underneath it. And one dedicated cash account, for example, is for all target transactions. And we believe that another dedicated cash account will emerge for the digital euro transactions. And the problem now is you have to handle two liquidity cycles. One cycle is the account-based payment transactions, like we know. And the second is the wallet transaction. And the problem is that we don't know how customers will behave. Will they actually top up their wallet and spend it like a telephone card? Or will they use it as some form of instant payment device when tapping, for example, at a grocery store or something? And the main problem is that the payment itself and the funding of the wallet is not the same thing, or not necessarily the same thing. So the event that is relevant for the liquidity is not the payment, but the funding of the wallet. And whenever the funding of a wallet happens, the dedicated cash account at the central bank for the digital euro will be reduced by the same amount. And this is, of course, some sort of reconciliation problem that the bank has to handle. But also you have to know, how does my customer base behave? Are they actually adopting to use digital euro faster than I thought? I need to have some sort of clear image about what's going to happen on this account. And this is going to get more and more complicated the more payment rates you are going to add. We discussed already stablecoins, for example, and if you create a stablecoin that is accessible by customers, you have a third liquidity cycle to manage. But okay, for the moment, let's stick to the digital euro thing. So to wrap it all up in one sentence, the account-based transactions rely on clearing, and the clearing aspect is basically gone because digital euro payments are real-time payments, and also the payment itself is not the event triggering the reduction of the dedicated cash account, but the funding of the wallet is. And this is something that banks have to take into account.
And also looking for the from the perspective of the operational risk, right? And operational challenges, because you increase for sure all the risk when you have this. When the treasuries suddenly become more important, right? So you have this increase in the risk.
They definitely will, because from an economical perspective, you don't want to have too much, let's call it cash reserves sitting at the central bank, because you will lose on interest rates. So that's just not a good business model to have. So you want to optimize for a healthy buffer, but you don't want to optimize for not having to optimize at all. So yeah.
Yeah, exactly. Anyway, we know that many banks don't want another large transformation project. So it's possible to prepare for the digital euro step by step.
I mean, yeah, kind of. I think it strictly depends on if you want to build it yourself, or if you want to opt for some sort of buying opportunity, or maybe even a software as a service solution. Since our solution is pretty much modularized, and we discussed it with many banks already, if there's a logical transition path from, let's call it, account-based payments to digital payments. And we found that implementing an event-oriented archive system is a good place to start to build a foundation for the future payment platform, if you will. And this is the first sensible step to do. And from there, it's pretty much going with the flow. The less you integrate into your existing systems, the better, we think. Because you can, on the first step, like implement the archive system, implement the technology or the solution you are buying. into your systems, and from there you can develop any further. For example, a bank in Italy asked us if it's possible to implement services like, for example, buy now, pay later, or some sort of supply chain finances for the merchant side. And we said yes, because the state machine is very much open to rule-based engines, and we can just implement stuff like that. So having an idea of how the digital euro will evolve after the release 1.0, let's call it that, is a pretty good idea to think about. Yeah, do we really want to invest in the digital euro ecosystem, or is it just some sort of rail that we are going to offer our clients because we are forced to by law? This is a decision every bank has to make by themselves, of course. But yeah, so the clearer the picture, what's going to happen after the digital euro launch, the better you can say how to adjust and go step by step.
Mm-hmm. And what mistakes should banks avoid? So you already mentioned one, so wait, right? Wait to do this later. It's a mistake, but what other mistakes you can mention?
Yeah, I think the biggest mistake is to treat the digital euro as some sort of appendix that you are not dependent on when it comes to living, like with the human body, because there's so much going to happen, and the digital euro is just one of many possible digital processing rails that are going to pop up in the future. So thinking of it like a must-have is of course true, because it is a must-have, but it shouldn't be treated as some sort of bad child within the family. And I think this is especially important since we are not only building another digital payment rail, we are building digital infrastructure that helps making Europe more sovereign. And I think this is a big step in the right direction. We saw it a couple of weeks ago when a friendly government chooses to cut us off from the newest AI models. And I'm not saying that we are a threat of being cut off from existing payment networks that are US dominated, but it could happen potentially. And it's a good thing to have sovereign infrastructure in place, and payments is critical infrastructure in my view. So treating it accordingly is not only a good advice, but also my personal wish. Please make it safe.
Yeah, it's good that you also mentioned all the future solutions. So looking beyond the digital euro, so this could the same architecture also support tokenized deposits, stable coins, and other forms of digital money?
Yeah, that's a good question as well. As I mentioned before with the Swiss franc, that's Ethereum based, and of course you have to check if the underlying technology is compatible with what you have already in place. And if not, you have to be able to put the next and the next payment rail next to each other, to mitigate that. And so the idea of thinking about payments as, or of the digital euro as the first cornerstone of a real platform-based payments infrastructure is probably a good idea.
Mm-hmm. And how, yeah, it's really important to have this flexibility when you're designing this payment infrastructure, right?
Yeah, it is. At least that's what I feel like.
Yeah, I agree. I will believe that in the future we have different forms of digital money working together. So yeah, it's really important to look for this kind of flexibility.
Yeah, I agree.
Yeah. And what are you personally most excited about over the next few years as the digital euro moves closer to the implementation?
Yeah, I think the most crucial thing I'm looking forward is to see how fast the adoption of the digital euro will be, because there are many discussions held about, is there really a use case? Do we need digital money? Do we need digital euro as a whole? And my personal view, as I said already, is we need sovereign money, and this is why I'm pro digital euro. And yeah, I'm looking forward to see whether my fellow citizens think the same or not. I think it's generally a good idea, but of course, I'm also super interested on how the technology evolves. And there are so many systems that are working together. Like when you buy a software as a service solution, you have the hyperscalers, you have the digital Euro service platform, you have the existing banking platforms, the different formats. All that stuff. It's pretty exciting for me because it's part of my own learning curve because I'm not a technician. I'm actually a communications guy who happened to land in IT.
Yeah, but we are approaching the end. But thank you so much, Florian.
Thanks for having me. It was fun.
Really fascinating discussion. But before we wrap up, could you please share your final thoughts? Any closing remarks?
I think I said so much already. It's just I wish for the digital euro to succeed. And all the participants that are on the call right now, it's super strange, by the way, because I only see Tamara's face and none of the others. I hope you're having fun. You had fun during this session. And I hope you're having fun and enough engagement building the digital euro if that's what you are tasked by your bank, if you're coming from a bank. I'm pretty excited about it. And I hope it will be a success because that's very personal opinion. Europe needs finally a success.
Amazing. Yeah, thanks a lot. We still have many questions here. Really nice to see people so interested in the topic, but we'll make sure to to address all the questions afterwards. Of course, that we also have the recording published at the DIA channel. But once again, thanks so much, Florian, for being here and for this amazing discussion. And a big thank you as well to everyone watching and engaging with us today. If you enjoy this episode, please like the video, share it with your network, and subscribe to our channel to support this initiative and never miss a future episode. See you soon for the next episode of the DIA Member Spotlight series. Until then, stay curious and stay connected. Thanks a lot. Bye.